Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London, UK feed wheat.
Paris milling week. After the market created a cusp back in late May, we had a resultant break higher, something I'd cautioned about back then, and prices rose and fell through stratified layers of support and resistance. Some of them seemed then, and still seem, quite dense, such as the congestion area of overhead resistance that we sit underneath between 238 to 242. And that's containing the March 2013 high at 240 even, the now declining short medium moving average, currently 237, and slowly declining medium moving average, currently 241. Above this is the February 2013 resistance at 247 and the declining long moving average, currently 244. The market tried pushing down through this 238 to 242 congestion a few times, most recently in mid-October and then more severely from late October until 2 weeks ago when prices finally punched down through the September 2021 low at 234. Prices fell down through the next congestion at 227 but halted at the earlier mentioned cusp of the May low at 221. As part of this move lower, I would now like to discuss once again some previously mentioned big picture items. Firstly, this market is still well within the big bear channel, currently 179 to 255, which is highlighted in dark blue on my daily chart, and originating from October 2022. That's well over a year ago. Secondly, a few weeks ago I pointed out the opportunity for an early September to date sideways triangle. Well, this has also changed its shape into a descending triangle, and it's highlighted in bright red on my daily chart, currently 233 to 240. 2 weeks ago, the market broke down through the lower trend line, and I said at the time, and I quote, "At the moment, it may still be regarded as a breach, but I feel it appropriate to lay out some targets below for such a pattern." Thus, a primary target X would be in the 227 zone, just around the next congestion below, whilst a harder to reach secondary target X1 would be in the 220 even zone, just under the May 2023 low. End of quote. Late last week, prices reached target X, and earlier this week we saw prices come within €1.25 of target X1. Enough for me to feel that the target has been achieved, though of course it would be nice to see prices reach the 220 zone directly. This is something I'm still watching out for. As a final point, and this also may come from my close studying of the recent, well, it also does come from my close studying of the recent action, and that was to look at the action around the 11th of October as a bow tie formation of the moving averages, specifically the short moving average currently at 231, the short medium moving average currently at 237, and the medium moving average currently 241. Now, though it was a fairly flat bow tie, in that the moving average went into the pattern in the right order but came out a bit sloppy, it nevertheless is a genuine bow tie formation. So what did this mean for the market? Well, the theory behind bow tie formations is the market will move in the general direction of the moving averages as they exit the bow tie, which was mainly downwards, and which has actually happened, eventually. Additionally, between 15 to 20 sessions after the crossover, we should have seen a move in prices in the direction of the bow tie. That is, lower. So here, it would have been between approximately 1st and 8th of November. Well, we didn't really see any significant move lower, not till mid-November. However, I was partially satisfied with this bow tie pattern, as during this time window, it did change the original sideways triangle into a descending triangle, and we have seen the resultant, if delayed, response to this bearish bow tie formation. The only question left is whether the market will drop down and go for target X1 at 220 even, or will what we have seen be enough? Please just remember this. Overall, we are still bearish in the big picture, but a little below we have the absolute 50% Fibonacci line at 218 3/4, and then the rising 2020 to date March 2020 to date uptrend, currently at 214 even. Do not overlook these. We'll have to see what happens as a result. London UK feed wheat. The move higher from the May to July double bottom pattern reached its climax in mid to late July, with a combination of an island top that was also part of a small double top, an Adam and Eve type. Since then, prices moved lower, but stabilized over the September 2021 low at 181.70, but more especially over the key 50% absolute Fibonacci line at 180.5. The short medium moving average, currently 187 even, has tried, not wholly successfully, to act as a sort of cap on any rises. And the medium moving average, currently at 190.40, has moved from being a market attractor to being a better cap on recent tries higher. Interestingly, one of the key recent features here, and it's a surprising feature, has been a neckline highlighted in dark blue on my daily chart, currently at 184.85, of the May to June reverse head and shoulders bottom, acting as a pretty reasonable support. Though I suspect in the background the September 2021 low and the 50% absolute Fibonacci line have been a good help in propping up prices. I said 2 weeks ago, and I quote, "This situation, I suspect, is not designed to last, as coming in from above we have the declining long moving average, currently 191.60, dropping down to no doubt try and pressure prices lower. You can see the effect it had back in late July, capping the market with a small double top. It is not long now until the long moving average drops into the frame, so I would keep a close eye on it, as the room for maneuver of this market is becoming quite restricted." End of quote. Now, I think we may see a potential cusp coming about as soon as today, as we are set up this week to form a possible weekly key reversal here. Thus, if we close tonight either over 189.30 or under 188 even, well, then we'd be on. Anything in between would have formed a lesser outside weak pattern. Right now, we are looking at a possible weekly key reversal down, with yesterday's close below the neckline. Other than this, in the big picture, there is currently no significant pattern development being undertaken, which is, I suppose, a little disappointing and unsurprising at the same time. I watch with interest where we will finish this week and where we start next week.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.